Hi everyone, hope you're doing well. I'm just going to do a video here on how to beat inflation again. So it's not financial advice, but just something that you might find useful to look at. And this is, I suppose, how to beat inflation in the UK in May or so 2026. Because also that's when the information is current, I don't know how long it'll stay current for. But in terms of just accounts that I come across that might be attractive for some people, the one that I always point to, and I'll direct to one, of my videos that I've done recently on this here is, if you're looking to save a house, save for a house, and you're looking to purchase it in over a year's time, a lifetime ISA is a really good one potentially to go for, because you get a 25% bonus on up to £4,000 that you put in, so that'd be up to £1,000 off bonus, and you do also earn just normal interest generally on top of that as well. So that's say 4%, it's 29% interest in a year, which is quite impressive, assuming you hold it more than a year. But yeah, so it's quite good in that regard, but you have to use it for a house or for retirement, and there are penalties if you take it out for any other purpose apart from a terminal prognosis, I believe. So it's very restrictive in that regard, but it does come out of your ISA allowance. Another one that I always say about is stocks and shares ISA. The market on average, and speaking of these are global type funds, but also there's our S&P 500's America specific fund. They tend to beat inflation. Over the last 100 years, I think it averages something like 8 to 10%. So, if inflation now you think it's quite high and it's 3.75% roughly, or the number the Bank of England worked to is 3.2% inflation. But also there's different ways to calculate that, and if you include certain things and don't include other things, it's a different level. So if we just call it 3.75, which is the base rate for now, basically anything above that percentage you're going to be making money, even if it's a small amount. Anything below, we'll call it 3.75%, you're losing money. So if the market averages 8% after any fees that you get on the accounts, which ideally you do not pay any fees, or very low fees, you're still 4.25% above the inflation, but obviously it does carry the risk, as any stocks, any shares do. Whereas a cash ISA, I've seen a fixed one on Tembo, 4.4% for 12 months. You have to put in £500. It's not very flexible. If you take anything out, 90 days penalty on the interest, so you could, in theory, get back less than you put in. Not financial advice. Hope you found this helpful, and that's Tembo.